Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the Dow Jones Industrial Average, being recorded on Saturday, September the 6th at 10:30 a.m. Pacific Daylight Time. I'm here on the cash market and I'm on my maximum monthly chart, which is where I normally start. So I'm going to do a quick review of this large picture, and so the data that I have available goes back to 1902. So I have about 123 years of data here and labeled. So starting from the highest degree that I have, which is the grand supercycle, and I retrieved that from R.N. Elliott's original works. When he started, that's where he started, and he put the grand supercycle wave 1 at the 1929 highs. He put Grand Supercycle Wave 2 at the 1932 lows. So with that in mind, that is where I started to build my big picture based on that. So technically then, we are in an ongoing Grand Supercycle Wave 3. Within that, there will be 5 waves of supercycle degree, that sky blue color, of which we have waves 1 and 2 complete. So we are within supercycle wave 3 of grand supercycle wave 3. What's going to be in that supercycle third wave? 5 waves of cycle degree, of which we have 1 and 2 complete, and we're close to finishing cycle wave 3. So cycle wave 3 actually began in June of 1949. So cycle 3 has been underway and nearly complete after a great deal of time. So in fact, we have about 76 years here that this has been building. And within it, there's been periods of stagflation, uh, deflation, the collapse of 1987, the crash, a very long period of a primary fourth wave, which included the great financial collapse of 2008, 2009. We have the pandemic in 2020. We had an extended period of low interest rates. And we also had a period of interest rates um, rising. And then again, another period of interest rates beginning to come back down. So, all of that to say, we are coming close to completing cycle wave 3, which sets up a cycle fourth wave correction pretty much just around the corner. When we're looking at a large picture like this, it's just around the corner, about ready to begin. So, and what that then suggests is that once cycle 4 is underway, the way Elliott listed it and wrote it for us, the fourth wave, when in motion, will find its terminus, its endpoint, within the fourth wave of 1 lesser degree. Well, we're dealing with a cycle degree third wave, and so 1 lesser degree is primary. That's why I put this box here. So ultimately, I'm not saying it's a guarantee, but ultimately, if we follow what the guidelines that Elliott left for us, that this fourth wave, this cycle fourth wave, should find its endpoint within this price territory of the primary fourth wave, which again bottomed in 2009. And so, I mean, we can actually go and say that I'd have to open this up so I actually can see where there it is, right there. So the low was 6,469 or 6,470, and that was in March of 2009. So with that in mind, that is a possibility. Now, there are several other possibilities because let's not forget that while we are looking for within the cycle, wave 4, 3 waves, ABC of primary degree. And being that it's a larger correction, a larger fourth wave, these internal waves can produce a lot of different uh, forms, a lot of different wave patterns. And in fact, what we can look at is that there are really between 11 and 13 different patterns that the market can take within the confines or within the structure of a cycle degree corrective fourth wave. So, having said all that, we have to include the entire box for where this can come in. So if we go from the top side, that's 14,021. All the way down to that bottom side, that's 65, let's just say 6,500. So that's a big window for the market to come down to. Granted, right now, we are trading at a very high level. So let me go back out and pull this back down to at least our 5-year, because that then takes us up to, well, I'm going to go back out here for just a moment so I can just fill in that blank. What we have here is that we're in primary wave 5. Within primary wave 5, there's going to be 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. So we're in intermediate wave 5 of primary wave 5. Now I can bring it down to that 5-year chart, 5-year weekly chart. And there's intermediate 3, intermediate wave 4. So here is intermediate wave 5. Intermediate wave 5 began in October of 2022. So shortly, we will be 3 years in this particular rally phase, this intermediate fifth wave, be 3 years. If we push that out to the primary degree, we've been in primary wave 5 for 16 years. So again, is it 16 years? Boy, my brain's not functioning. Too early in the morning. So yes, 16 years. Easy to forget your math, right? Okay, so primary wave 5 has been in motion for 16 years. Intermediate wave 5 has been in motion for going on 3. So we're getting close. Now, inside of intermediate wave 5, there's going to be 5 waves of minor degree, of which 1, 2, 3, and 4 complete. Wave 4 finishing in April of this year, and that had to do everything to do with the tariffs. The announcement of the tariffs, the pausing of the tariffs, everything got combined right into this low. And that low was April the 7th. So we've been in minor wave 5 of intermediate wave 5 since April of this year. So minor wave 5 will consist of 5 waves of minute degree, of which 1, 2, 3, and 4 are complete. And that's where I'm going to pick it up. That wave 4, in minute wave 4 being complete, and we're in minute wave 5 of minor wave 5 of intermediate wave 5 of primary wave 5 of cycle degree 3. So we're getting there. Now I'm going to bring this down pretty quickly, bring it down to the daily, where we can take a look at minor wave 5. So we have minute 1, 2, 3, and 4 complete minute wave 4, and the Dow completed on August the 1st of this year, 2025. And so within that, we are tracking minute wave 5, which will consist of 5 waves of minuet degree, of which I think we've done 1, 2, and 3, and we're still within that 4th wave. So now I want to bring this one larger. Let me bring that down. Here is minute wave 5. So this is where we're dealing with right now. And we have minuet waves 1, 2, and 3. Now, could I say that this completed minuet wave 4? Yeah, I can. And it would have been great up until Friday. So what it really kind of tells me is that we had an ABC down. I'm going to label that A. We had an ABC up. I'm going to label that B. Why? Because that, and we could say 1, 2, 3, but if that's the 4th wave, it overlaps wave 1, therefore knocking it out. It is invalid. So it has to be a B wave. And we're working a C wave down to put in minuet wave 4. Now, I understand that some are saying that I guess it might have been the futures market. But this high was 45,770. This high was 45,757. So yes, it did go up and produce a new all-time high right there by about, I guess, 13 points. So that does not qualify to be five waves up because you can see it's there's an A, B, C. So it has to remain there as an ABC up for the B wave. And now we're working this 1, 2, and we have a 3 and a 4 and a 5. I'm going to take that wave 1 is the extended wave in this case, uh, primarily because this fourth wave still in motion cannot drift or trade below uh, 44,498. So let's just call it 45,000. No, it's 44,500. Excuse me. So that in mind, I could put additional levels on here for the C wave. And you can see if I even put 0.618, 1.618, that's too low. That's overlap. And so that has to come out. Now, could come down closer. And I'm just going to take this one off and leave it here. And then we have the 50% at 44,775. That one seems more realistic, but I'm basically considering this a flat. So I think that 100%, which comes in at 44,939, should do the trick. Now that means that we're going to get a 3, a 4, and a 5. And wave 1 is going to be the longest, wave 5 will be the shortest. That's my take right now. Now, don't know. The market is going to let us know what's going on here. If there is the possibility that this completed, well, that completes the entire structure up to cycle degree. And I don't think that's done yet. So we're going to wait and see. So I'm looking for a C wave. I think that's 1, that's 2. We might get a little bit higher push to start, or we go immediately into the follow through to finish the C wave down. So, and again, our markers 45,008, 44,939, 44,775. And pretty much I want it to hold there. And that would give, C putting in a new low below wave A, which is acceptable, although pretty much you're looking for a flat. And I think it can come in a little bit higher. So 44,939 puts it that C equals A. And that's kind of where I'm thinking. And the market is still pretty, I think it's still got the oomph to push it. Once that's complete, then I'll be running 1 to 4, and we'll find where we can find that resistance to complete this whole picture. Now, this particular minute 5 has resistance beginning at 45,976. Now, that's the third most common. The first most common is 100%, where wave 5 equals wave 1. And again, just going out to that daily, you're going to see wave 1 across the board, not only just in the Dow, but in the Nasdaq and the S&P, was that gigantic rally after the announcement came that the president was going to pause putting those tariffs in place back in April. First, he spoke about them. We dropped because it was in a tussle between the U.S. and China, and the tariffs were up to 145%, and it just drove the market to the low. And then there was a pause, and then became this huge rally where in the Dow, it was up 3,000 in one day, actually one afternoon. And so that marking over produces pretty large fifth wave. So I cannot say that we get down here in the 4 and that minuet wave 5 just explodes higher, because we have 618 at 45,976, most common 100. at 45,596. Right? Second most, 1.618, 50,216. And again, we're looking going like, well, where are we now? We're at 45,000. Where are we going to get 5,000 points from? That's a lot. I don't know. I'm just giving the fib. My guess is more likely if we get a strong enough push. Now, don't forget, what are we walking into? We're walking into that period of time between now and the 17th of September, which is Fed Day, which is an expiration for volatility, which is 2 days prior to likely the monthly August expiration, which I think is going to be pretty large. So, with all of that in mind, I think that the market is basically baking in that we're going to get a quarter point cut on the 17th. I believe that that could just produce a very, very fast rally. Just a pop, and that's it. And that'll mark the end. I've spoken about this before. I believe that it's like it'll be what would call, a tombstone top, because it'll thrust, and that'll be it. And it's the knee-jerk reaction that the market and algorithms are going to be taking because, oh, rate cut, rally. And so that's, I believe, will happen. And I think also will come at a time we'll be breaking to new all-time highs, and many will view that as a breakout, and then we're just going to keep on going. Um, but we'll see. But definitely we'll see. So I think we can get up there. We can finish that in a very dynamic fashion, but I think that could be it. I think it could be that tombstone type of a top, but I've also saw another that I think is more accurate, that, the Wile E. Coyote moment for the market. And if those of us old enough, or even, that don't know the cartoon, the Roadrunner, then, you really got to go watch, because Wile E. Coyote was also chasing the Roadrunner, but he would run off a cliff and trying to get to the Roadrunner, and suddenly stop and realize, look up, look down, and realize there was nothing but air below him, and boom, he would fall. And that's what I think can happen to the market. It thrusts its way up there and realizes there's nobody else coming in, and there's nothing but air down below. There's no support, and we just start to tumble down. And it could be linked to many, many different things. We have enough things going on globally, nationally, that could really upset this apple cart, particularly at all-time highs. So that's kind of what I have in mind. But I think we can get there. I think we can do it. So getting back down to that hourly chart. So I think what we're going to have is a continuation to the downside, and then we'll begin to rally inside that minuet fifth wave. And a lot of buildup. I'm not sure exactly what, because we don't have the news yet, but I believe the market will build to and start to rally. To be honest with you, I think that will also be carried over by the S&P and the Nasdaq, which are also in that same position, not necessarily the same wave count, but the same position, looking for a little bit additional downside before we turn in those markets. This would be, excuse me, sub minuet wave one, and so sub minuet wave two would be forming now. And in that case, if it's the same here, so in other words, if I have to put put the four here, and this ends up being wave one, which it could, doesn't fit clean because I don't really like the structure. But if it does, then this would be wave one, subminuet wave one. No, take it back. Yeah, subminuet wave one of minuet five. And that will ran as the wave two, and wave two can't can't break below 44,948. So this has to pump up. This becomes the more realistic level to complete a wave two, and that would just be A, B, and a C. So, going to get interesting. We'll have to wait and see. So again, I'm marking it AB, looking for a C, which gives it a little bit more room to come down. But if not, then I have to count this as wave one. And I likely could push it up, put the four there, leaving this all, 1, 2, 3, ABC. No, it just doesn't fit, but we'll see. We'll see how it has to fit. I could take it down and put it into here to the line chart, and let's see. See, that kind of equals that almost. So if I'm looking for that, if this is going to be an ABC, I could put A, B, 1, 2, 3, 4, 5, put the 5, put the 5 here, put the 4 underneath it, and this is wave one. That's going to be the alternate, and I'm going to keep that in mind. Um, and I was looking at it before, thought it was best to leave this as A and a B and coming down in a C wave and giving the full force of that minuet fifth wave to go up. But it may have already started. So we have to keep that as an alternate. And that would then put it on track to that the counts all are in agreement with each other. Except that this is not minuet degree. It is a sub minuet degree, but the same position in terms of what, a little bit more to the downside and then a stronger rally picking up again. And we'll see. We'll see how that all works out. Either way, I think the Dow, along with the rest, have a little bit additional downside to do that could come in basically almost start in the futures market. So by the time Monday morning comes along, it might just gap and run the other direction. So we'll see. We'll see how this all begins to unfold. Let's go over and take a look at, before I go there, I'm just going to go up to the daily. We're going to take a look at our moving averages. So all along during this corrective phase, the daily did not move into negative territory, even slightly. Here we saw, and here we saw that the market broke below the 8, but the 8 never turned lower, slightly there, to start to challenge the 20. If it broke below the 20, then we'd be looking for stronger downside. Didn't happen. And in fact, this, we plowed down through the 8, got close to the 20, but regained and closed at the daily 8. So while we might come down and we actually might break that 20, I think the same thing will happen. It'll be quick and a turn. And whether this is wave one and this is going to be two, or if this is B and we're going to get a C wave, I think we get down, we finish it, and we turn. So, and these are basically still in alignment to go up. So all of that negative type trade is being absorbed by the market as not threatening because the moving averages are not showing it. And so now let me go back over here and let's go take a look at the futures market. So everything up to this point is actually going to be the same. But here again, if I just put it over to the line chart, which is the close, you can see they're so close to one another that it could be A, B, 1, 2, 3, 4, 5. And I could just move this to wave 4 here. And this is 5 up, wave 1, ABC for wave 2. And yep, it could come back down. It could come down. I would just move this. In fact, I lean towards that, but I'm going to leave it as is, which gives a little bit more room to the downside versus not being able to break below that level if I move it. So Oh, this one. So I'm going to kind of leave it as I have it for right now, and we'll see. I mean, Monday should tell the tale, and we'll be able to figure it, we'll put it out. So, but just bear in mind that wave four could be here, and that what we have is one, two, three, four, five, wave one. And you can see how on the um, futures market, it is a clean five. So whether that's A, B, C, or we moving the fourth wave completion over here. So this would be A, B, and then we got a C down to here, and the four goes there, and then this is wave one. So I'm going to let that kind of work itself out, and we will be able to tell pretty cleanly. If we hold above this level to finish this, then I'm going to likely move it, consider it 1, 2, because we'd be looking for a third, and we'd be looking for power. And so a C wave down, we're still going to be looking for power, but this one would hold above that. If it's just a 2, it's going to hold below, above, excuse me, where wave 4. So where wave 1 started. So that would be where wave 1 started, is here. And so, of course, the rule is that wave 2 cannot go beyond the starting point of wave 1. Therefore, if it does, it's not a wave 2. Okay, so leaving that all in place here as well. Um, I'm going to go out to the daily. I'm moving averages should really be reflective of the same, and they are. Still totally in alignment to go up. In fact, all of that noise that we had on Friday produced a flat, produced at the 8 period moving average, just went flat, just goes sideways here. And so that continues to be support, which is why the market went back and stopped there. So that's really it for the Dow. There's not any surprises. There's nothing really clicking to say, oh, yeah, watch for this. It seems pretty clean. It's a little bit more advanced within that minute wave 5 because this did not form that triangle pattern as it did in the others that I mentioned, that running fourth wave, just not possible here. So it's just a straight, the 4 remains uh, over here at the August 1st low. And then we had 1, 2, and then 1, 2, 3, 4, 5, 3, ABC, 4, possibly over here will be the fourth. And then we have wave 1 or ABC, and then we start in minuet wave 5. So, and that's the story. A couple of things that I want to mention in here. For those who may have an interest in day trading and your markets would be either the NASDAQ or the S&P, the Logical Signals Trade Room is back in action, and it'll be launching again on Monday. And if you have an interest in that, you can jump over to www.logicalsignals.com/trade room, and you'll get all the details about what I'll be covering, what we'll be trading, and what I'm going to be presenting in the trade room, and what I'll be using to for day trading. So the trade room really is geared or being geared towards day traders and swing traders. So if you're a swing trader in any of the indexes or even in the options, you'll get plenty of information that'll help you determine what type of position you want to put in and what direction you might want to go. I'm also offering a discounted price. If you are interested in joining, you can join between now and September the 16th and receive a discounted price. And I'm also offering a 6-month subscription to 15 traders. And this is more of just kind of like anchoring the trade room sort of thing. Um, and I'm giving a discount price on that as well for 6 months. So a discount price of $150. So in fact, it's like you're getting 6 and only paying for 5. Um, and that's it. That's it for right now. And so our next podcast That's the other thing. I am reinstituting the Elliott Wave, not the Elliott Wave, the Eye of the Storm podcast, which is where I am going to be using that to present not only guests now and then, but my weekly updates. And those are basically going to be for the Dow, the S&P, and the NASDAQ. Possibly also I'll be adding some others, but right now I'm starting with those three. All right, thank you for your attention today, and our next podcast will be next week.